right, so welcome everybody. This is our weekly review, and as I think we were talking about, the markets are getting a little more, I would say, fidgety with the war continuing. Um, One thing which we did discuss, I think last week we had a great meetup and we had in-person discussions, and we were talking about the 6,700 level, which finally got broken in last couple of days. While I think we spent a lot of time, even with all the wars and all the negative news flowing, we did see that market were resilient, and all the options trades, or we can call it the market makers, which were protecting the position, that really played out for a few days. But now what we are seeing, as I was discussing earlier, is that the goalpost is shifting because the news is negative, the VIX is very high. I think the oil prices are driving most of the economy. So before we jump into those kind of discussion, let's quickly get going on the where we see the market. So okay, I hope people can see the screen. So this is, I'm going to simplify it. So we had been talking about all these weeks, I think before the war, we were talking about the sideways move. This year, we did not see much of the move while tech was correcting and, there was wider markets going up. But what we saw with this is the war, which I think changed the things. You are seeing there's an actual negative direction now, which S&P 500 is taking. So this definitely is a change, and the change being there is a risk which is getting priced in. Having said that, means if you see, we have still like not broken any major levels. We are very close to the previous 6,700 support, and now the new support which is forming is more close to. Let's look at the SPX actually, is forming close to 6,600. And this was, I think, these are the levels which were protected in previous drops, whether it was October drop or November drop. So what we are also seeing in the actual data, which we were discussing last week anyway, that earlier they tried to support 6,700 levels, and then now most of the market makers, they are shifting, and the open positions are shifting towards 6,600 levels on the SPX. So I think the goalpost is shifting. The reason, again, it's very simple, right? So we all know what is going on. The oil, I think oil is defining all the market moves. Oil is not cooling down. The Strait of Hormuz is still kind of a battlefield where we used to have almost 20% of the world's oil, gas, and not just oil and gas, but also the derivative products, whether it is fertilizers, whether it is helium, whether it's all the industrial products which are the byproducts of refining and so on. You're talking about a big chunk of Saudi Arabia and UAE's refineries and so on. All those are located in the Strait of Hormuz, and they use that channel. So I think there is enough going around in the news. So I'm not going to go into detail of the aspects of what is going on there. But what is the impact? The impact is um, as the conflict goes around, and as people realize that the Trump administration is not able to answer, means in fact they had a pretty disastrous press conferences where they are basically saying that yeah, they have not yet planned to protect any ships yet in the Strait of Hormuz. That is creating more and more panic in this oil market. So overall, I would say this is where the biggest risk is. On the other hand, there has been some positive news. I would say a few positive news on the oil side were that Russian oil was unsanctioned. Then we had Iran itself confirming that they are going to let China and India vessels will go through. And so if you look at the previous supply, a lot of Saudi Arabia's export actually go to China and India. Like so, it's a big portion of it means ultimately oil prices react to the total traffic and how much of the oil is removed from the world economy. And if let's say if this comes true, if they are allowing the China or India destined vessels, that itself releases some pressure on oil. And if you remember, we were discussing, like, at the start of when the war started, that the projections were like something like $150 if the Strait of Hormuz does not open. Right now, oil is still within $100. I won't say it's ideal for the market, but it is not a disastrous situation either. So overall, I would say just watch. I think the best signal right now in the market of is purely oil. Everything is correlated to oil. It is defining the market moves. So as oil goes up every day, you see the market weakening, and that's how people are playing this. So as you can clearly see, we were holding up in this range. In fact, we were positive after the war for quite some time. In fact, if you go to NASDAQ, it will be surprising to see that for almost 10 days or since the war started, so this was the Iran war, you are actually trading in positive. So as we have been discussing in macro group and so on, that the tech has been reversing, software trade was reversing. So underlyings were very positive for software stock and the tech stocks. And but I think ultimately the pressure is coming, the selling pressure is coming on all stocks because nobody was expecting this situation to worsen. And okay, so what is the impact? The impact is, of course, inflation. Means oil prices being high has a direct correlation. And as you can see, that even the 10-year yields are going up now. We are seeing a lot more spikes. We have actually broken out first time in very long time since Trump administration came into being, and starting in January last year, first time we have broken out of the downtrend. So this is definitely the biggest concern, I would call it. You're not yet at a panic level again. Just like, as I said, the oil at $100 is a bad situation, but not the worst situation yet. Similarly, I would say the yields around 4.6% is much, I would say, is the real panic situation. And this is more of a, we can say, alarming, so that we are knocking on the doors of, where things get tough for the market. So yes, fundamentals are shifting. So let's accept the fact that this war, which was not supposed to be so bad for US, it is actually getting to a point, and it's all because of expected oil prices. So what this also means is that the rest of the market is not that perturbed. So if you take the oil issues out, so any day when oil was actually cooling down, we were seeing, like, for example, when after the big spike, then the oil actually had corrected for I would say, couple of days on 11th March, you had seen that we had actually gone up quite a bit. Like we had a pretty decent up move in both Nasdaq and SPX. So this is, if you see, the 10th and 11th March, we had almost made much higher levels than where the war started. So it also means that the resolution is pretty simple. As soon as the market realizes that oil supply is back in action and some kind of resolution is done on the Strait of Hormuz, I think that will resolve this issue. So underlying strength is very visible in the market. As I said, tech is reversing. Overall, market is holding up, but oil has to be resolved. That's the situation. And other thing which we can discuss is this time, this is the first time I would say in very long time where Bitcoin is outperforming in the risk assets. We are seeing that since the war, it is up. In fact, it was way up higher at many levels, even though it's correcting today. But overall, I would say it's showing that it has bottomed out. We have been talking about this, but again, it has long way to go before it starts the uptrend. It's more of a showing strength in the current environment, which is positive, because in the kind of volatility we have seen before, these kind of volatility has usually impacted Bitcoin negatively. So if you are into the investment side on Bitcoin, it looks like market is shifting towards Bitcoin. And again, if you are tracking the big changes that Michael Saylor's strategy has started recovering. They are buying thousands of Bitcoins again every week. So there's a lot of similar characteristics of 2025, or the bull market is returning right now in terms of accumulation by treasury companies like say strategy and so on. And I think the war impact was mostly positive for Bitcoin, which is a great sign. um, Now, okay, let's have a look at gold. I think gold, interestingly, is going down, which is kind of a surprise. Means again, this shows you that fundamentals sometimes are not correlated. Sometimes it is. It may ideally people expect any kind of conflict to increase the demand for gold and as a safe haven. So as we have been talking at Proflex, like if you are with us, we have been talking since January that gold and silver have been in a very speculatory environment in the overlays. So what we are seeing right now is that when the volatility goes up, and if the gold is going down or the silver is going down, that also shows you that the impact of volatility. Volatility means the cost of speculation, the margins go up, the option prices go up, everything goes up. That means who are the people who are the most impacted? The speculators. When the asset is under stress, when the speculation price is higher, that means the volatility is higher. That means it was driven by speculators more in the current regime. So I have talked about this many times. If we draw a very simple trend line, the gold actual, even a very nice trend line from last year, we are basically 4,800 will still be a bull market. So having said that, this whole speculatory moves which we highlighted, which were concerning to us in January, that is showing us that right now gold is becoming less of a safe haven and more of a speculatory assets for traders. And as the volatility stays high, gold will be under pressure. So volatility has to cool down. And now we can see Bitcoin not having that kind of pressure shows you that the speculators are actually not in this game, or probably they were more short, net short, and they have to exit when they are speculating on Bitcoin in a negative way. So these are great times when the volatility is high. You can see whether fundamentals are driving an asset or speculations are driving the market. So you will see speculators getting cleaned up in a high volatility environments much faster. And that's what is visible right now in terms of correlation of gold versus Bitcoin. So great way, I think, great time to find the strength versus weakness, overbought and speculate, blown up assets which are overbought versus oversold. And I think we are seeing it's a great example what we saw just between Bitcoin and gold, how they are behaving differently. So coming back to the same thing, I think I would say Nasdaq is doing better than SPY after a very long time. In fact, if you look at some of the other like software index, IGV is actually up since war. So as you can see, that this was the time when war started, and we are actually net positive. Other than the last few days, it was actually up very beautifully. So you can see the software sector, all the sectors which were kind of in a negative flow where there was a too much speculation on the negative direction, they are all gaining in this mode. So very clear, I think, what is happening with the VIX. That is, you are seeing fundamentally sectors underperforming and outperforming based on whether they were overbought or oversold. So this is great. I would say in general, these are the times when markets become healthier, because now you are talking about speculators getting cleaned up in both directions. If you are too short or too long, that is what is happening. And when the cost of speculation increases with the volatility, then we see only the strong hands remaining and the weak hands get cleaned up. So and I think the volatility is also directly correlated to oil right now. So again, I would say everything is going to be reacting to oil prices. So this is your barometer. Going forward, if you're wondering where the markets will go, I think if every day you see bigger and bigger spikes in oil, you can understand that all the markets which are under pressure will stay under pressure. And I think there is no rocket science now to actually even guess what is going to happen in next few days. In fact, you don't even need to see the news. You can see how the war is going by just looking at this price, whether it's going in favor of US or it's going against. So that's as simple as that. So I will just stop here and I will say, let's take a few questions, but I think that's a summary of the markets. And that's where we see the trends forming. Again, one thing before, while you are putting your questions down, again, this is high volatility time can be good if you know how to play the volatility in your favor. And this is what I think we love to educate. And when we talk about options and so on, when we are selling options, but also remember that you are getting higher premiums in options only because the risk is higher. So just make sure you understand the max risk. So this is just one guidance I would have for people, because we do see the responsibility, because we have encouraged a lot of people into trading options because we believe in it and we use them in a great way in terms of insurance and so on. If you see whether it's in all access or in managed accounts, this is the times when we actually outperform the market by a big deal. And that is because it is pretty much a science of how to use this volatility for your advantage. But if you don't understand it, just be very careful. That's my message to everybody, especially individual traders, because things look from the perspective of you get used to it, right? Last 2 3 years have been great. The market have been it was very easy money every time you buy the dip or you take a very high margin position, and market used to pay up very fast, whether it was Liberation Day, V-shaped recovery or something. But the reality right now is that some of these things are structural, right? Means if the oil does not recover, or if the war continues where there's no solution for the oil supplies, this can have multi-month, pressure on markets, because now you have to reset expectation of inflation. You have to reset the expectation of how this long-term disruptions. And I would relate it more to the COVID time, because if you remember, even though the market went up too fast after COVID because of the stimulus, but the supply chain constraints continued for a very long time. So the supply chains of the world economy are very, very, very fragile. Even a few weeks of lockdown in Strait of Hormuz, and as I said, it's not about oil only. It is about the derivative products. Like there's a lot of derivative products which flow through that route in terms of the shipping, whether it is fertilizers, whether it is LNG, like not just oil. There's a lot of gas which where the world depends on. Then there are lot of other raw materials like helium and many other things which are required for a lot of other industries. There is a report which suggested how bad the whole silicon industry or the semiconductor industry can be hit if the helium supplies are disrupted, which is a big part of it flows through that Strait of Hormuz. And so those kind of things are nobody yet understands, because all those analyses are coming on the things will become worse and worse as we become from weeks to months. Right now we are only 2 weeks into it, so there are some unknowns in the market which are still defining the panic, and I would say some kind of a risk premium, and that can impact almost every sector in the market. And those things you cannot defend with any technicals or anything. That if the things change, the market will definitely start pricing that in. But right now, thankfully, I think market is still pretty much hoping for a resolution every day, and it's only inching slowly and not reacting in a very fragile manner for now. So that's all we can say. And as we discussed multiple times, this whole options market is definitely helping in dampening it because there's a lot of hedging and so on. The size of the options in the market making is increasing every day. We have a very big expiry next week. And actually, that's also risky because, as we just discussed, that they had been protecting 6,700 level multiple days. They kept on doing that, and now they're shifting the goalpost. Now, because of the fundamental change, we are seeing a lot more position build up at 6,600, and now the 6,600 is becoming critical. But by next Friday, when the expiry happens, they may start unrolling and start planning for the next, post March 20th, which is when almost 5 trillion worth of options expire. And if that um, move, we might adjust to totally different levels, and that level may be much lower because sometimes these things play out over time. So I hope that market resolves itself in some form. I think the war resolves itself in some form by next week, because then market can actually drop bigger also after that, once the protection goes away for all the short and long position which are built up around these levels. So I think we're watching carefully how the next week evolves. It will be a very crucial week, and I think after the next week expiry, things can go in either direction, which will be pretty much interesting move to see in the context of what is happening in the world. So yeah, that's all from my side. So guys, let's take a quick couple of questions if you have any, and we can wrap up the meeting for today. You can unmute yourself if you want to ask a question, or you can just type it in the chat box. Right. So I think we don't have any questions. So thanks everyone for joining. I think we can we'll try to continue this every week. And yeah, we have also started one update is that we have also started that week in numbers kind of video updates. You will see on our YouTube channel, and we will post that. The team will keep preparing. Even if we don't have this call, we will try to do some kind of a summary of the week, which will be sent out. So do watch out for that. And yeah, we have any other suggestions you have, do let us know. Yeah, please go ahead. It looks like there's a question.
So I think I was asking about, I initially said trading on hyperliquid, but I've heard of some folks who are individuals who are market making on hyperliquid. So is that something, I mean, that sounds different. That's obviously different than trading, right?
Mhm.
So,
Yeah, so
so
I think market making is a science. I think a lot of used to call it liquidity providers. That is, I think if you're talking about automated market makers, there are a lot of good ways which I think the blockchain-based solutions like Hyperliquid provide you. Like you can provide liquidity and just be aware of the risks around it, because every system comes with its own set of risks. Especially we something call it as an impermanent loss or some permanent losses based on the direction of the move. So as long as you understand them, yes, those are, I think, blockchain-based solutions are pretty good with making it easy for everybody. Like, for example, if you want to do market making on NASDAQ or New York Stock Exchange, you cannot do it. So that's a power of the blockchain platforms. They allow you to do that as a retail investor. And because it's pretty much open solutions. But I think in terms of, and that's what I think excites people when they look at hyperliquid kind of platforms. But when you are talking about Robin Hoods of the world. They are doing their own bookkeeping, bookmaking, and so on, which is very highly unreliable. And they also sell it to institutional clients. So that's where what I don't recommend usually trading on those for in after hours and so on, because those are highly manipulated, and where there is very limited regulatory oversight on those. So I think either blockchain-based solutions, which are pretty much transparent and open to everybody, as long as you understand the risks and you understand what are your worst case scenarios. I'm sure these are good things to participate in if you understand them. Means I personally participated in a lot of DeFi previously, and I like those platforms. But I think if you're talking about purely as an investor, as said, I strongly believe that most of these fringe markets right now are not of the size of what the US normal trading hour markets are, and that's a real price discovery. So I would just say, unless you're using it for a very specific advantage, like some people look at the extended markets or some kind of these markets spike downs, because all these markets will ultimately correlate to the existing markets on when the market opens, right? So the price will usually match. So if you find any opportunities on a spike down or spike up to buy or sell, those are the some ways people use it, these markets also. But again, as I said, be very careful, especially if you are not doing any sizable trades, because liquidity usually is very low on those.
Well, do you see liquidity for these after hours venues, whether it's DeFi or TradFi? Do you see them over the next 3 to 5 years? I mean, increasing and big
Mhm.
players. I mean, do you see them? I mean, nobody knows for sure, but do you see the trend headed in that direction?
I think so, and I think everywhere the volumes are increasing. Trading is becoming, almost everybody trades these days. Number of accounts opened everywhere are increasing. There is not just that. I think not just trading, but I would say even the your prediction markets are growing very fast. So, I mean, as I sometimes joke that we are becoming like, I hope that these are investors, but if you are investor or if you are just making your basic plans, you don't need 24-hour trading. Unfortunately, 90% of these trades are people who are gambling, doing a few minutes trade or hourly trade or minute trades. And yeah, I mean, these things are growing. And to be frank, I don't think these are healthy either, because most of the people who need to trade 24 hours, they are mostly gamblers. They are not really doing plan-based investing or something. Whether I believe they will increase, yes, because unfortunately these kind of gambling activities are increasing. Do they add a lot of value? Probably not. Other than the some of these blockchain-based things, as I said, because they are a little more transparent and a little more, I would say, there is opportunity for market making, as you said, for retail investors, which does not exist in other markets. So there are benefits. There are benefits to these markets, but they have a long way to go to really create value, I think.
Yeah.
Yep. All right. Yeah. Any other question, guys? Okay, let's take a quick one, because I think I would love to close early. There's another call happening here, but yeah, I think it's as I said, like coming back to the market itself, we can talk a little bit if you have any questions on that. So there is uncertainty. We have to accept that, right? I mean, there is nobody knows, because this is a event driven volatility. This is not fundamental to the market. There's something happening in the world which is historic, which is once in lifetime, you can call it, like these kind of wars. This is much bigger war than anything we have seen in recent times. When I say recent times, it's like direct impact to economy. When we're talking about, like 20% of the world's energy supplies. We're talking about a big country like Iran, and plus they have involved so many other countries around them, which was not expected by either US or Israel. Means historically they just respond back to the country which is attacking them, and this time it is they are realizing that it's an asymmetric war and they will lose it. So they decided to bring everybody along and saying, now go deal with it. So it's a very, very unconventional situation, which market is surprised by that. Means, in fact, forget about market. Even the US is surprised by that. If you look at the US Trump administration responses and so on, definitely nobody was expecting them to start just spraying bombs all over the place. Like they did not expect them to attack UAE and Saudi Arabia and all the nearby neighbors. So these are the kind of things which is changing on a daily basis in terms of how to deal with it. And this will go down in history, I would say, as one of the big lessons in the modern warfare. And in that scenarios, when things are changing so fast and The world is learning something which never existed before, where direct one-to-one war spilling into all the Middle East. I think this is something which is market is digesting, I would say, in a very orderly way right now. Is if you look at, if you compare it with the some other markets, if you look at Asian markets, if you look at some other markets, they are like crashing really hard versus the US market. So that shows you the strength of this market also. So having said that, as I said, means we should be pretty much ready for any scenario. And this is not a war which US can just say, okay, we are done. Because even if you're done, Iran has been damaged enough, and they are now um, not going to say, okay, now US ships can go through or all the energy supplies can go through. Let's say if today even US puts the weapons down and say that let's stop the war, they will still not get concessions from like this small decentralized whatever these 31 provinces. They have these individuals making decisions. That's what they are saying. The analysts are saying that because the leadership is so damaged for Iran, that there's not even a guarantee. Like recently, I mean, they have been attacking ship from China while they're saying yes, the ship is we will allow Chinese ships. So there's not even a way they are able to implement any policy within Iran. That's how much this war has taken us to a level where it's very difficult to expect what is going to happen in that area in near future. And that is not based on what US does, it's based on what is already done. It's not based on what is going to be happening. So this is where the uncertainty, which market is not able to wrap their head around, and that is the unknown, whether this war can resolve in one way or other. And that's what I think. Every day things are being analyzed, and people are trying to figure out how this will end. So it's a real uncertainty. It's like a real unknown, and in terms of time, in terms of impact, which the market is dealing with. So this is why I said, right, means all the analysis will ultimately boil down to the best experts getting you the oil price, right? Means this is this is why you should love the markets also. Like what is going to happen with the war will ultimately get priced into oil. So if your oil prices start coming down, that means market is willing to bet their money on their analysis, right? So that's when you will start seeing that people are becoming optimistic that this will resolve. And if oil keeps going up, you know that market is not optimistic. So that's just one parameter right now. Everything else you can ignore. Everything else is noise other than the oil price. So that's how unfortunately this market is. But also that is the tool you have to know how the war is going. Means you don't need to read any biased headlines from any news channels. Market tells you the news of how good the war is going and what is the probability of war ending purely based on oil price. With that thought, I think let's close this call. Have a great weekend, and all the best to everybody. Thank you. Bye bye.